Welcome back. So quickly want to just go into today's economic calendar or excuse me, the weekly economic calendar and what's on there and the impact that I foresee here in the market this week. Um, I could potentially, I would say that the market is kind of going to be steadily downstreaming here Monday, Tuesday, Wednesday into a rally Thursday, Friday. There's core retail sales, import and export, and retail sales coming in Friday. Some of the biggest reports come in Friday. Um, Friday at Friday is loaded, absolutely loaded with reports. You've got Thursday jobless claims coming in. That always runs a pretty steady market. You've got core CPI coming in on Thursday. You got crude oil coming in Wednesday. Monday, Tuesday, pretty light. So um, there's always money to be made no matter what. But when you talk about the overall market and how people are going to trade it Wednesday, Thursday, Friday, of course, as long as those reports come in positive. If they come in negative, then absolutely the other way around. Hey there, welcome back. I'm gonna show essentially with this stream here. I want people to see how um, options income weekly, monthly generation works. So essentially, it is it's simple. It really is. It's a hard concept if you're not familiar, but essentially the way it works is you own 100 shares of any company. Um, Obviously, the more expensive they are, the more pricier the options are. The more expensive the stock is, the more that it's going to be as well. So the one I have up on the screen here is AMD. You know, it's a $49 stock. If essentially we um, own 100 shares of AMD, it's around a $5,000 investment. So basically, $5,000 invested into the market. And in you're gonna have market upswing to and make money. So as the stock's growing, you make money. And then also, what you can do is write something called options each week, and these are covered options because you own it. If you didn't own it, then they're naked options, and that's a little bit different story. But if we take a look at just the weekly options, so I'm gonna upload. If you take a look right around here, you've got something called expiration, strike, call. So you have two things. You have a call and a put. When you have people that are buying calls, buying puts, selling calls, and selling puts. So when you are the owner of the stock, you are on the selling side of the option. Okay? If you are interested in buying the stock at an agreed price, which is called your strike price, you're on the buying side. Let me say that one more time. You have people that buy calls, buy puts, sell calls, sell puts. When you own the shares and you want to generate income, you're on the selling side of the option. When you want to speculate or you want to purchase shares at an agreed strike price, you're on the buying side of the option. Okay? So right here we have expiration date of Friday. And right now, market wise, AMD is $49 a share. Let's just make it easy and say we owned AMD at $49 a share. $49. If we take $49, we multiply it by 100, $4,900 US dollar. And your return on the market, so how much you're going to make on that stock a day, is probably a maximum 2%. $100 is all you're going to make a day. And on a stock like AMD, we look at AMD. Let me go here, and I want to pull up this information here and see what the beta. Essentially, it's a 3 beta. That's actually a volatile stock, to be honest. And primarily the reason it's that is because over the last year, I mean, this thing was a little under $9 2 years ago. It is on an absolute screamer. So you have the Xbox, the PlayStation, all the Microsoft servers, IBM, are all using AMD. So that's going to be the reason for its upswing. And then if we take a look at its rival, NVIDIA, and we take a look at its stock, it shows NVIDIA was 300, now back to 250, but during its AMD's biggest push, it went to 124. So they are taking market share. But anyway, I don't want to get too off track here. But AMD we bought at $49. Okay? And regardless of when we bought it, it doesn't really matter. But what we're gonna do is we're gonna sell options on AMD. Now you can hedge. So say the stock is dropping, you can use this as a hedging point to where you are generating weekly income even though the stock is going down. But we're gonna say as if the stock is still going up and you want to generate income on AMD weekly, monthly, annually, quarterly. However, there's many different ways, but we're going to make it weekly. And since the market's not open, the market's not live, I can't actually show real live data, but what I can show is as of Friday's close. So you have what they call a strike price. The strike price is the agreed contract price with you as the seller and the buyer. So that contract price is what you will deliver your shares to the buyer at expiration if it's in the money. Let me take a step back. In the money means that the stock is trading above your strike price. We get to pick our strike price. We totally get to pick that. And if we buy it at 49, we obviously have investment strategy that it will go up, right? So we're going to basically do, I'm going to say the $51 put. Okay. So $51 is our agreed price with the buyer. So we're the sellers, the buyer. The buyer out there, he basically says, no, this thing is going to go through the roof this week for whatever reason. He believes it's going to go through the roof. So what he does is he goes into this contract with you as the seller at agreed $51 price point. Now, trading goes on, stock goes up, stock goes down, however, or it goes down, however it is. But upon expiration, if $51 is not how much the stock is trading for, you keep all the money. You keep your shares, you keep the premium, which is how much they pay you weekly, or how much you earned on it weekly, and you write it again next week. Absolute worst case scenario, the stock goes above 51, you have to deliver your shares to him at $51. You bought it at 49, so you make $2 a share on this trade right out the gate. But then you're also going to make right in here. Let's take a look at this right here. This says 1.84. Keep in mind you have to multiply that by 100. This is $184. Okay? So this is your premium. This is the money. The day you sell your option is the day $184 goes into your pocket. Okay? So, today, I own 100 shares of AMD at $49. I'm going to sell a put at $51, and I'm going to make $184 today. Regardless of what happens this week, I don't care what happens with AMD. I'm going to pocket $184. Okay? So I invested $4,900. And if I take 184 divided by 4,900, 4,900 divided by 184.184. Thank you. Little under 4% gain. So you're essentially going to get a weekly gain of about 3%. Okay? So, let's say tomorrow it's $51.50. You don't deliver your shares then. The buyer of the contract has to execute in order for that to happen. If they do not, then you do not deliver your shares. They have until Friday to get the best price. If tomorrow it goes above 51, and then Wednesday it goes below 51 and keeps going down, ball game's off. They lost their chance. So if we were to do a little bit more math here, and we take, about $184 a week, multiply that by 52. So 184 times $52. That's $9,568 annual on a $4,900 investment. 200%. Okay? Now, each week, we're going to write the option further out and higher as it grows or as it drops. And you can make money either way. It doesn't matter which way it's going. You can make money either way. So, this is a way to generate 200% on your investment with literally zero risk. The only risk, the absolute only risk, is that you have to deliver your shares at your strike price, but you're going to make money on that strike price because you're going to sell it higher than what you bought it for anyway. The risk comes in that if it goes to $60 in that week, and we had a strike price at 51, well, now the buyer of that option is going to make the extra money because he's going to buy those 100 shares from you at $51 and sell them in the market at 60. Likelihood of that happening with AMD is very slim, but it could happen. But that is your risk. That is your only risk. Let's do another example. Let's do an Apple example because Apple is a little bit more pricey. A little bit more income generation on Apple. Okay? So Apple is $320. It's $32,000 to do this with Apple, right? You buy 100 shares of Apple, it's 32 grand. Now, one, you have one of the best companies out there, so you're owning something great anyway. But let's look at your income generation on Apple. Okay. So we own 100 shares. We bought it at $3.20. These are on Friday's close numbers. So I can't give you live data, but I will. I will either today or tomorrow give you live data to see this. But as of now, you're going to you're going to sell an option on your 100 shares at, let's see which one's going to give us the best income. It's about $325. Now you're going to earn $700 on your investment. So if we do a little math on that, 700 into your 32 grand, about 3% as well. Weekly, keep in mind. And 700, multiply that by 52, 36,000. You're making 100% gain annually. Now, a regular broker is going to say, I can make you 7%. You can write these options weekly. You can write them monthly. If we were to take a look at a monthly one, now we're talking thousands of dollars. But there's more time. So I just want to give you that little bit right there. And I'm gonna put it all out on paper for you so you can see it a little better. It's a little hard to show you on here, but there's literally no risk, none, to writing options on your shares. And on the other side of it, say you don't own the shares, you could do the buying side and make money as the stock's increasing without even caring about owning the shares. And that's a different investment strategy, and we'll get into that. But I'm going to leave you with that. Thanks for tuning in. CBIM, what is it? CBIMUI? Tesla man. You're the dude. You're the man. Remember that 15-minute leeway this morning. You want to watch that thing for about 15 minutes. At least watch that thing for 10. And it's still gapping up. It's up 7%. It will drop right there early morning to get you a good entry. And then let it run for the rest of the day. And again, like I said, Wednesday, Thursday, Friday, mass economic reports coming in will end the market strong. Today will probably be red. If I had to take a guess, I believe markets will be red today, leveling out tomorrow, Wednesday, Thursday, Friday run. Thanks for tuning in, and I'll see you guys shortly.